Hello Sector Watchers, welcome to the show. This is the 74th episode of Sector Spotlight on Tuesday the 6th of April, recording it on Monday the 5th. My name is Julius de Kempenaer and I'm presenting to you from Amsterdam in the Netherlands, where it is supposed to be spring. However, a week ago we had over 70 degrees Fahrenheit and a nice sunny weekend, and today we actually had hail and snow and we were back down to 40 degrees Fahrenheit, so back to square one. That resulted in me telling my daughter that it was her turn to take care of the horses outside because Daddy had to work, of course, in a nice and warm office. As it is the first Tuesday of the month, we will focus on monthly charts that have completed for March. And we will look as usual at the asset class monthly charts and the monthly charts for sectors. Before we do that, we will take a look at what happened last week on the daily RRGs and the rotations and the performances of the various asset classes and those sectors. On the left side of the screen we have the RRG showing asset classes that we track here in Sector Spotlight. And as you can see, it was a good week for the stock market. ITOT was up 3%, followed by V&Q, real estate 2.9%, and then we have the two commodity ETFs that we're tracking, GSG up 2.6%, and DJP up 1.1%. In between is the benchmark VBINX at 1.8. That means that the fixed income stuff, government bonds, high yield and corporate bonds are all below the benchmark. They have been underperforming the benchmark last week, basically to offset the positive performance for stocks, causing the benchmark to end up 1.8%. So government bonds were down 10 basis points, high yield was up 80 basis points, and corporate bonds were up 90 basis points. If we look at the rotations, then we see that V&Q is now starting to lose relative strength, relative momentum on the daily RRG, despite the fact that it gained 2.9% in the last week. And it's a good example that an RRG does not reflect actual performance. It reflects trends in relative performance, and that sometimes it causes confusion. You need a little bit of time to grasp that concept and to understand what you're looking at, and that it is not necessary or a guarantee that if something is inside the leading quadrant or at the right side of the RRG, that it automatically means that you will see a positive performance. Having said that, on the left side of the RRG, on the lagging quadrant, we have the two commodity ETFs. Both have been turning up, but as you can see, the performance was 2.6 and 1.1. The trend is still down versus the benchmark, and it is starting to improve a little bit. We will have a look at the long-term charts later on and see how this all fits into the longer-term picture. Fixed income, corporate bonds, government bonds, high yield all had a relatively good week in terms of relative trends, but the performance was a little bit disappointing, below the benchmark. We'll also take a look at that later on. And then stocks are sort of buried here behind that US dollar tail. So here it is highlighted, and you can see that it's got a very short tail, which means that this trend in stocks, even on a daily basis, is at the right hand side of the graph, which means that it is strong, and the short tail means that it is stable. So stocks are still in their stable relative uptrend versus VBINX. If we now move over to the right hand side of the screen, we will see the rotation for stocks, for sectors. And it was a very good week for technology, as well as consumer discretionary. So 2.9% higher for discretionary, and we'll see that tail right here. The relative trend came down, it started to move to the right, so sort of in line with the benchmark, which was up 2.8. SPY was up 2.8%, discretionary up 2.9, so that coincides. It's very close to the benchmark. That's exactly what that means. And then we had real estate losing relative strength, relative momentum, still up 3% for the week, far away to the right, so it's still a very strong sector. And then we have technology, which is inside the improving quadrant, picking up a little bit of relative strength, but not a lot of momentum. We're picking up relative strength because we're moving higher on the RS ratio scale. That's the horizontal scale, but there is not a lot of momentum backing that trend as of yet. And then we move to, basically these were the only three sectors that were outperforming the benchmark SPY, and then everything else was underperforming. That immediately shows how important XLK and XLY are in terms of weight for the S&P 500. It's always a bit tricky, cap weighted versus equal weighted. So this is all cap weighted, and XLK and XLY are obviously very heavyweight sectors. They're driving the index, and if they go higher, it's very likely that the market will go higher. So that happened last week. Now energy, very long tail, still losing relative strength, picking up a little bit of momentum, underperforming the benchmark a little bit. Materials, inside weakening, not a lot of momentum last week, lost a little bit of relative strength. And then we have industrials, also sort of following materials, lower on the RS ratio scale, so the relative trend is starting to weaken. Negative momentum, but it's not increasing in negativity. And then we have communication services, one of the stronger sectors on the longer term time frame. Disappointing week last week, or well, disappointing, still gained 2.2%, so which is 80 basis points below the benchmark. We have financials lower, 1.9% higher, but it's inside lagging. It's moving lower on the RS ratio scale. This is all relative, guys. This is all relative. So when you move lower, it doesn't necessarily mean that you're going down in price. You go up in price, but because you're underperforming the benchmark, you move into the lagging quadrant in this case. Healthcare had a up week, 1.3, well below the benchmark. Lost a little bit of momentum, as you can see here. This was the first 4 days, and then we rolled over on the Friday. So better part of the week it was good, and then on Friday we rolled over. And then we have utilities, been doing pretty well recently, moved into the leading quadrant, still gaining in terms of relative strength, not backed by a lot of momentum. And the same goes for staples, still most of the time moving higher on the RS ratio scale, and now starting to roll over as of last Friday. So this was it for last week. That was the short-term stuff. The conclusion is that stocks are still doing very well. Government bonds are still on the left-hand side. They had a good week, but rolled over a little bit. The relative trend is starting to roll over. Probably getting back into its normal situation where stocks will do much better and bonds will underperform. So I expect those to roll over. Commodities seem to be getting back up a little bit. It's very early. And then if we go to the sectors, then we had a good week for discretionary and technology, and all the others were underperforming. In the end of the day, it was a pretty good week for the stock market, up 2.8%. The first batch of monthly charts is covering asset classes, and if we kick off with the S&P 500 with SPY, then you can see that this long-term chart here is still on a roll. We continue to move higher. We actually made a new high as well as a new closing high. It's probably better visible when I zoom it in a little bit. You can see here, this is already the first day of trading, first 2 days of trading for April. So this is the month of March that was closed, and you can see that we made a new high and we also made a new closing high. So there's no doubt about it that this uptrend is still in play. We move to government bonds, and we see pretty much the opposite. Not as strongly negative as the S&P 500, but still, we're coming from levels over 28, 28.4, and we're now down to 26, which is massive in terms of bonds. First support level that I was watching didn't hold. It's just above 26.70, and I'm actually now watching an area where the market had a little bit of resistance early 2015, again early 2016, peaked above it, dropped back, went to the bottom of the range, and then we had 2 months where we peaked against it, and then it was support, and actually I expect it to become visible as support again if we continue to go lower in government bonds. If we go to IEF, then that's the 10-year equivalent. So Gov discovering all maturities, and IEF is the 7 to 10 year maturity. And you see a similar picture where we have this nice, pretty clear-cut double top that's completed and it's executing, and didn't manage to hold support around 114. In February, that was where it touched, and then in March we actually dropped below it, and we closed significantly below it, convincingly below it. And I think that the 7 to 10 year Treasury bond ETF is now on its way, say levels around 110. We'll see what happens, but the downside risk is definitely a lot bigger than the upside potential. We move to corporate bonds, LQD, somewhat similar, nice double top completed, on its way down. First support level I'm watching around 124, 125, somewhere in that area. That's where we expect support for corporate bonds to come in. So again here, serious downside risk for corporate bonds. High yield, still in the range, but as you can see, not very convincingly anymore. Pretty much since the start of this year, nothing happened. 88 was the high. It's stable, but it's definitely not going higher, and there is a lot of overhead resistance waiting for this market whenever it wants to go higher. Real estate, V&Q, doing very well. You can see I have the RRG here open on the left-hand side to get a little bit of perception. Just be careful, this RRG is on a weekly basis, and the chart is a monthly chart. Trying to make sense of these monthly charts on an absolute basis, so talking about up and down trends, not so much in relative terms. But you can see here that this nice up move in real estate, which stopped in March against this resistance area, and now in early April seems to be continuing and higher above that resistance area. That's actually coinciding with this nice tail moving into the leading quadrant at a strong RRG heading. We obviously had stocks here which is still comfortable inside the leading quadrant. Very short tail, meaning a stable trend, which is exactly what we're seeing on this monthly chart. And then we go to commodities, DJP. We've been talking about this last 2 times, I think we talked about monthlies. It's now pretty convincingly broken that down slanting resistance line. Had trouble, so this resistance here around 25.50 came into play. This was February, and then March wasn't able to go higher, and now this is the start of April. So looks like we're hitting that resistance area. It's not necessarily a problem, because I do think that this move here, which lasted for over a year, almost straight up, now needs to get some sort of a correction, some sort of a breather. And if we get a new significant higher low, then there is a very good chance that we're in the process of actually turning around that massive multi-year downtrend, over 10 years of downtrend in commodities with a few hiccups, but this trend was definitely down. So we'll have to see what's in store, but the first thing I need to see here is a significant higher low before we actually take out that overhead resistance level. We look at GSG, somewhat similar, not as strong. What's good here, what I like, is that it actually managed to get back above that massive support level, that get back to 1999, and then again 2016, and we dropped, and we're now starting our way higher. It looks a nice series of higher highs and higher lows, but you want a higher low in the magnitude of something like this, or the one here, or the one here, or the one here. So lows that are really in place with no lower levels for months on the left and the right hand side. So that's what we need here to form and then break higher. But nevertheless, commodities, they seem to be turning around a very long-term downtrend. We go to the dollar index. It's actually very interesting. We're still in a period of dollar strength, as you can see. So that's the last few months. But that in this perspective, it's still short term, because this is the monthly move, and you see that already middle of 2020 we broke below that support line and dipped, and now we're rallying. So there is dollar strength, there's no doubt about it. But in the bigger scheme of things, we need a hell of a lot more dollar strength to actually turn this around. So there is room for a little bit more upside. So dollar index probably towards, let's say, 95, maybe 96 if it drags out a little bit more in time. But that's where we need proof, or where we have to expect resistance and a renewed decline. And that translates into a euro-dollar rate where you can see that it is coming down, and you know that 95, 96 on the dollar index probably translates to, what shall we say, 114, 113, 114 in euro-dollar. If we hold there, if support holds there, then the euro might get another boost. If we drop back below this resistance line and dollar continues to strengthen, then it becomes really interesting, because then we could see levels down to 107 and maybe 105, and if 105 gives, there is much more. But we have spoken about monthly charts at least a few times before that's going to happen. Last chart that I want to share with you, two charts. Let's go for SPY versus IEF. That's the stock-bond ratio. No surprise, that's in a very strong uptrend still. So the case remains for bonds, stocks over bonds long-term. That remains intact. And if we look at the yield curve, then that is continuing to steepen at a very rapid pace, actually. The last little hick here, that is April. So better forget that. The month of March was one other straight line up. So that yield curve continues to steepen, and that's what we saw in these Gulf and IEF charts, where long-term bonds were rapidly coming down, pushing long-term yields up much faster than the short-term yield. So that's causing a steepening of the curve, which benefits sectors like financials and real estate, actually. We're going for a quick break, and after that we're going to talk about monthly charts for sectors. And what about sectors? How do these monthly charts for sectors look? Left side, the weekly RRG, right side, the monthly bar chart with some of my annotations. As you can see, I like my charts to be clean, not a lot of clutter, especially for monthly charts. I'm not a particular fan of putting a lot of indicators on it. I just like to look at price and see what that tells me. Starting with materials. By the way, we're already in April, so it's Monday the 5th of April. Market is now closed. So the last bar is the first few days of April. So we're actually looking at the prior bar for the month of March. And as you can see, materials set a new high, rose to a new monthly high, and also a new closing high on the monthly chart. That trend is still going higher. There's not a lot of reference on the upside. We got to let that trend move and see where it takes us. On the RRG, the XLB tail actually very nicely rotating back towards the leading quadrant. So materials are very likely to be one of the leading sectors going forward. We go to communication services. As you know, pretty nice rotation on the weekly RRG. Lost a little bit of momentum here, but the move is still cool. And as you can see here, communication services also set a new monthly high as well as a new closing high. So here also that uptrend undeniably intact. No reference in terms of resistance, so we just have to let this one go and see where it takes us. The RRG last, if we look at, this is today, so this was last week, it's losing a little bit of relative momentum, but not very much yet. So that trend is still there, and it coincides with a strong monthly chart in terms of price. We go to energy. We see that that chart is now running into trouble around overhead resistance in the 50 area, the area around 50 US dollars, where we had some significant lows in the past. This is a bottom in the making, I think. We have this lower highs, lower lows series. If this works out and we manage to stay above 40, which is the pit of the double bottom here, and then start to move higher, then energy could be in for a longer term turnaround. The RRG suggests that we need a little bit of a breather here in terms of relative strength going forward, which sort of coincides and matches with the picture that we see on the price chart here. We go to financials. Been doing pretty good for the last few months, and then it started to roll over a little bit, and you can see here that financials also set a new monthly high as well as a closing high. So the trend is still there. You can see that we didn't close at the high, so that's causing that little bit of a rollover here. Last bit of that move wasn't strong enough for that tail to remain at that strong heading, but it's still the second highest reading on the RS ratio line. So still a very good and very strong sector on a relative basis as well as on a price basis. We go to industrials. Very nice rotation on the RRG, pushing into the leading quadrant, and you can see here that it totally confirmed by the monthly chart. Very long bar last month, new closing high, new monthly high, and the close actually pretty close to the highest high of the month. So that is all very good, very strong sector, and now pushing into the leading quadrant. So here also industrials very likely to continue in an absolute term on price here, as well as on a relative term on the RRG, where it's pushing into the leading quadrant. Technology, that's our trouble baby. The price chart, it's interesting because technology did not set a new high. However, it did make a new closing high. So not both, just the close. And we had a good start in April. However, on the RRG, the tail is still moving into the lagging quadrant. So I'm gonna watch this closely because I'm not very convinced. It's a little bit of a discrepancy here. The relative strength sending me some negative signals. The price chart in terms of absolute trend, no denial. That is strong, that is good, that is upwards. I just want to see that relative move picks up again. So technology, strong in terms of price. At this moment in time, it's weakening in terms of relative. And I know the last few days tech have been picking up and is doing really well, but I can't deny this tail moving into the lagging quadrant. We'll have to see how fast this can be turned around and tech can pick up. So I'm still quite cautious about technology actually. Staples picking up inside the lagging quadrant, picking up, trend still there, new high, new closing high, so it's a strong sector. But the pace of that rise is not strong enough. It's one of the weakest sectors in terms of relative strength. Been there for a while. Go to real estate. And we've seen that. That's doing pretty strong. Pushing against, you know, there is resistance here in that 40 area. If we push that higher, the ultimate level is 42, but that's a intra-month high. I think the real resistance is here around 40. And in the first few days of April, we're actually trying to push that higher, and you can see that it coincides with a nice strong heading on the RRG tail inside the improving quadrant. So real estate still pushing to higher levels and contributing to a positive SPY. Utilities, one of the weaker sectors in terms of relative. If we put that on the monthly chart, then you can see that it's inside its channel. It's one of the sectors, one of the few sectors I should say, that is not pushing to a new high, is not making a new closing high. It's just nicely moving in that channel, typically defensive, weak in relative terms, but the trend is still up. It's just dabbling around with the market as a whole. Healthcare rotating into lagging. I've written about that, we talked about it, and it's still going on. If you look at the monthly chart, then you can see that this is also one of the sectors. The highest high for healthcare was actually set in January. We haven't seen a new high in healthcare since January. We did see this month a new closing high. So it's the same as technology, not a new high, but a new closing high, which is in a way indicating a little bit of weakness in relative strength. Arthur Hill actually wrote a very nice piece last week on how you can measure relative strength by just comparing where the highs and lows in a chart have been formed. So I advise you go read that piece. It's very insightful just to look at relative strength only on a chart, not on any indicator whatsoever. And then finally we go to discretionary, and you can also see the tail there moving into the lagging quadrant. And if we look at the price chart, then you can see, and this is the bar that we need to look at, not a new high for discretionary, however, also a new closing high. So it's in the same boat as technology and healthcare, and it's in the same boat here as well. So I'm still pretty cautious. First few days of April, very good, but it's still a young month. If I wrap this up, and I just made a few notes for myself, and what I found is that there's actually 5 sectors that made a new high and a new closing high. And there are 3 sectors that made new closing highs. So 8 out of 11 sectors are still exhibiting strong signs in terms of price and relative. And that means that we're still in a bull market and there are no signs of a trend reversal in absolute trends. Ladies and gentlemen, this wraps Sector Spotlight for today, for this week. I hope you liked the show. Please leave us any comments, email, discussions, YouTube comments, whatever you like, any channel you can find. Stay safe for now, and I hope to see you back again next week. Sector Spotlight airs every Tuesday from 10:30 to 11 a.m. Eastern.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.